Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group, and happy hump day. Man, it has been a busy morning. 800-951-0592. That's our toll-free number. Apparently everybody knows it because the phone has not stopped ringing. The website at allamericangold.com. And remember, today we did get CPI. We got to talk about it. We will. Hot in craziness. We've had just a line of people here in Colorado picking up, and I've been talking to them. People in the housing market, people in plumbing and air conditioning and all the the service sector, and every one of them has the same story to tell. And it gets weird when they say, "I've never seen anything like it." I'm 50. Most of my customers are between 40 and 75. Not all, but most. So when people say, "I've never seen anything like it," you really need to pay attention to it. And I don't know where the central bank is at. I don't know what the Biden administration is thinking. It's mind-boggling, and you better buckle up because it's just getting started. And we'll talk about that. We're going to talk about silver today. We're going to talk economics 101 on silver, supply and demand. That's it. Okay? I'm not going to talk about really anything else other than supply and demand, and then you decide whether or not you need to have some silver put away to go along with all that gold. I will be working short hours this week. My son is graduating high school, my youngest, our baby, if you will. My wife and I, soon to be empty nesters. Matter of fact, he's got a report to camp. He's playing football at the University of San Diego in June. I think it's June 21st. So we only got a few weeks left. My mom's in town. Our older son's in town. So I'm going to be working some abbreviated hours. I will be in Colorado next week. I'll be in Colorado Monday through Thursday, actually flying in on Sunday, and we'll be there, like I said, through Thursday. I hope to see a lot of you there when you're picking up products, or maybe you're getting some CBD, or if you just want to say hello. I'm going to try to be anchored at the station. I may have to go out and about here and there, but for the most part, I will be at the radio station, so I look forward to that. CBD, man, so critical to what we're doing at the radio station, and thank you guys so much. You guys are really making a difference out there. You're starting to hear a bunch of new advertisers. Wait till next week. I mean, the amount of new advertisers, it's starting to pile up, and it goes, without saying this, people are paying attention. We are growing by leaps and bounds at the radio station. More and more listeners every single day, every single week. Our rates are fantastic. And believe me, we've got such a loyal audience. They are going to support you out there. And if you have any problems in getting a hold of any of our advertisers, email us. Contact at 1360khnc.com, and we'll make sure you guys get connected out there. And we're trying to add them to our website as fast as we can, but sometimes we got them on the air before we've got them on the website. So reach out. We'll help you do that. And remember, on CBD, for the whole month of May, every time you order online, you get put into the raffle. If you go out to our shopping cart right now, you'll see the gift basket. Someone's winning that thing. That's that personal care basket. And, I mean, it's got hundreds and hundreds of dollars worth of product in there, all for, the consumer, your personal health And for the rest of this month, when you order online, put KHNC in the promo code box, and we're just going to take $5 off. Why? Because we want you to try these products. Because I know if you try them, you're going to love them, and you're going to make it part of your routine, and you're going to continually support the station and help ensure at least some form of freedom isn't going to be blocked out there. So make sure you go check it out. 1360 KHNC. Hit the shopping cart button. Right now, we have got another massive sell-off on Wall Street. The Dow is down right now 460 points. The Nasdaq's down 300 points. The S&P's down 70 points. Gold's down like 14, 15 bucks, mostly profit taking. Silver's down 30 cents. Nothing big there. But all because of what happened with the CPI number, the Consumer Price Index. And this is what's scary, because we know that number's make-believe. It's fantasy. But it came in much hotter than expected, way above the 2% nonsense number that they just made up out of thin air. And now everybody's talking about what comes next. We've had multiple people start questioning the central bank and their logic. Another billionaire did it today. I'll tell you who and what he said when we return. 800-951-0592. Buy this. It's not a big pullback, but buy it anyway. Because this is how this is going to work. When you get the lead up, to the CPI and the PPI numbers, you're going to hear me talk about this commodity hit an all-time record high today. That commodity, this one, that one, on and on. Today's a great example. Copper, another all-time record high. Corn, soybeans. The highest, I think we're talking about 15 or 20 years today. And it just doesn't stop. Used vehicle prices, new all-time record high. And what happens is you see gold run as we start talking about it. And then the day the CPI reports come out, there's always a brief little sell-off. Because interest rates rise, right? The dollar, which is at 90.50, okay, which is gone nowhere, has a brief reprieve, and then you spend a whole nother month talking about this record, that record, boom, 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 boom. So gold's going to keep running, silver's going to keep running. We have a like I said, is it a day, 2 days? I don't know, a couple of days if we're lucky, but that's going to be it. Here was the numbers. April, CPI, up 4.2% in the month of April. They were expecting 3.6. I don't know who they are, but, whatever. The month-to-month gain. Now, this is an important one. So how much did it jump from March to April? They said it was 0.8%, which would put inflation at about 9.6%. Right? If you multiplied that by 12, they were expecting only a 0.2% increase. The core number, now remember, because they think we can live without food and energy. Why they think that, I don't know. Of course, I should take that back. I do know. They like to say, oh, well, it's volatile. Yes. But volatility goes both ways. So you'd think it would just average out. But, of course, we know better, don't we? But stripped out core CPI, up 0.3%. 3% year over year. Year over year, 3%. My bad. I don't want to misspeak on that. So that's already 50% higher than what they said they wanted it to be. Why am I getting fired up about it? Because they're not doing anything to stop it. And I know they like to say the word transitory. Here's what they really mean. Here's what they're hoping for. Fingers crossed. Is next year, prices don't go much higher than where they are today. That should scare the you-know-what out of everybody. Because, just using like corn and soybeans. Do you know they're up over 100% year over year? I think corn's up like 60% just this year. Right? I mean, lumber's up like, I don't even know what is lumber up, 300%? Right? That's their definition of transitory. See, they know it's never going back, folks. That's not what they mean by transitory. See, they'll just say, well, look, year over year, look how much better it is now. And I don't think that's going to happen either. That's kind of the problem. So we've had a lot of people, I used Jeff Gunlatch, I used Stanley Druckenmiller, right, openly questioning the Fed. Daniel Martino Booth just did it. There was somebody that I don't normally follow. He is the owner. He's a billionaire of Interactive Brokers. You may have seen the commercials, right? Have you seen it? He is the guy that owns Interactive Brokers. Thomas Peterfree. He is from Hungary. Matter of fact, he didn't even come to the United States until 1965. So he was in Hungary after World War II. And here's what he said this morning about what's happening. Whenever I hear numbers like this, I look back to my childhood growing up in Hungary, where I was playing with billion-dollar notes. The value of money meant nothing. So, again, remember what I said earlier when I'm talking to my customers. And a lot of my customers are small business owners, like myself. They're right there. They see it. They know. And it's amazing. Like, I get it. Like, if the housing guys are telling me, hey, I've never seen anything like it. That's okay, yeah. But it's not. It's all of them. Every single one. I don't care what the field is. I've never seen anything like it. And now you've got this billionaire who owns Interactive Brokers saying, hey, this brings me back to when I was a child in Hungary after World War II. We know about like the Weimar Republic in Germany after World War I, right? Normally we see these events after things like that, but this time, guess what? There's no World War. Here's what else he had to say. I'm very worried. This is an unstoppable situation because the longer the Fed waits, the more they will have to raise rates. He said this in turn makes U.S. government debt services extremely challenging, and he's being kind. We are basically painting ourselves into a box, and I don't see how we're going to get out of it. And this is exactly right where I'm at. I don't get it. I don't understand. What are they doing? The Biden administration, we knew that was going to be trouble. Losing both of those seats in Georgia was horrific. and they don't get it. I'm listening to Chuck Schumer, Nancy Pelosi. Did you see what Gavin Newsom wants to do in California? He wants to send checks just to Californians. They think this rising inflation means we got to send more money. That's what they think. That's how their logic works. The central bank should know better. But I already told you, the wolf is guarding the hen house. The longer they don't do anything, the higher rates have to go. I mean, I'm going right back to the 70s. Because that's the only example I know of. And of course, here you've got this billionaire who grew up in Hungary. What happened there makes the 70s look like child's play. Weimar Republic in Germany makes it look like child's play. And he's like, I've never seen anything like it. Takes me right back. What are they doing? The longer they wait, the more trouble we're going to have. And this is really, I think, the biggest problem. Because all of you out there listening, I know you know it. You're seeing it. We're consumers. And we consume, and everything that we consume is costing more and more and more. And then you throw things out like the pipeline thing. Wow. Used car prices today surpassed $25,000 for the first time ever. Go back to 1971. You could have bought a house, a nice house, middle-class house, 1971 for $25K. Now, $25K gets you a used car. Think about if you could go back. What was a new Corvette? Like $3,000? You could buy 8 Corvettes. I mean, it's incredible. It's incredible. Just to finish up on this, and then I promise we'll get to silver and for the rest of the show. But I want to tell you how they got to this number, because this will really leave you scratching your head, because it's so much higher than what they said. So they had an 0.8% increase in June. By the way, March was 0.6%, February 3.5%, January 2.5%. I mean, we're on this steady path. They said food was up. Let's call it, I'll round up 0.4%. Really? I wish. But okay. Because let's face it, if something got expensive, you'll buy something else. Energy prices. And I don't know where they get this number. They said it was down a tenth. What? I mean, average price of gasoline just broke $3. Household furniture and supplies. Now this number is going way up. That was up 0.9. Right, so that when you see a number like 0.9, that means it's up over 10% year over year. Apparel 0.3. Motor vehicles and parts 4.3%. Now I question this because used vehicles was up 10%. They said new vehicles barely moved. Have you tried to buy a new vehicle lately? Yeah, I got words for you. Don't. Medical care commodities. It's your medical cost. It was up only 0.5%. Yeah, you know what? Here's what's funny. Guess what I got in the mail during this time period? I got my new premiums. We went from $780 a month to $1,006. Nothing changed. I didn't ask for more insurance. I didn't ask for better insurance. Right? I mean, think about these increases and then look at them try to tell me Oh, well, for the year, even if I annualized it, it only went up 5%. No, it didn't. Right? I mean, we're talking about an increase of almost 25%. And they're trying to tell me 5. How about shelter? This one I loved. The owner equivalent of rent. Someone's really got to explain this to these guys. It only went up 0.2%. Yes. The way they track inflation. And by the way, that actually was cheaper than March or February. But according to these magical creatures called the central bank, your rent or your mortgage is only up 2.5% for the year. That's it. That's it. Patriot Radio News Hour. I know, right? How bad is it really? If the guy from Hungary has anything about it, he's like, get ready to start carrying around $1 billion notes because money will be nothing. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. As promised, we're going to talk about silver right now. And we know, we know about premiums. We know how expensive the physical silver market is. And everybody's waiting on the paper market. And we're going to talk really about supply and demand. Because ultimately, at the end of the day, this is the story that's going to rule the day. The paper, we get it. Listen, by default, they want gold and silver, platinum and palladium. They want it to be as cheap as possible. They do. But supply and demand ends up ruling the day in the end. So let's just go through it. The Lombardi report. He does when it comes to silver, he's probably one of the guys that I look to the most. He does a lot of good research on this stuff. And here's what he says. There's a perfect storm brewing in silver. Silver prices look dirt cheap right now. If you're ignoring the gray precious metals, you could be making a grave mistake. Okay. Why does he think that? And he immediately is going right to the supply and demand side on silver. So, when it comes to the U.S., now we know Silver Eagles, how are they expensive? 2021 Silver Eagles. We don't even have them here. I mean, I could get them probably for, I don't know, like $42 or $43, and then have to charge you more for them. But the U.S. Mint, they're not out. It's not like they're not making them. They are. They've sold over 13 million ounces of silver this year. Go back to 2019. We only sold 14.8 million for the whole year that year. So demand is big right now. In 2020, the U.S. Mint sold 30 million ounces. Now remember, we got the design change. And again, I think the number is going to be right around 30 because that's all they're going to make. Matter of fact, I know the U.S. Mint, we could have sold 30 million ounces right now if they had the product. No doubt about it. But they didn't. They only had 13 million. When you look at the miners themselves, Lombardi accurately points out how the miners have struggled. And that just recently, the silver price has come to the point where the miners can make money. Remember, listen, people forget. Silver was $13 14 months ago. People forget that. Miners weren't doing anything. They weren't exploring, looking for silver. They weren't doing any of that stuff. Now at $27, hey, that was looking pretty good, but now all of a sudden here comes inflation, and all of a sudden $27 isn't that good. And so Lombardi is saying, hey, listen, don't expect that to change. Now, the Silver Institute, every year, they produce what they call the supply and demand forecast. Okay? In 2021, they're anticipating mine production to be 848.5, metric tons. It's a lot. Now, I don't think that's going to happen, but okay. And here's why. Let me tell you why. Last year was 784. So they're anticipating, that's a big jump, almost a 10% increase in mine production. This 848 level would be the highest level going back to 2017. So let's hope that happens. Any miss in mine production is going to be a problem, and I'll tell you why in a minute. Recycling. Okay. Now, silver does wear out, unlike gold, but they can recycle silver. They're anticipating recycling to also increase just under 10% to 196 metric tons. Now, that number, I can almost guarantee you, won't happen. That would be the highest number in a decade. Recycling has averaged about roughly 160 to 170 metric tons. Somehow they're saying we're going to get to 196. Of course, I guess if silver prices get high enough, that could have, prices are going to have to go really high. Last time recycling hit that high, remember that year that it touched 50? That was the last time. So where we're going all the way back to 2011. So they're saying in total supply, just over 1,056 metric tons. Okay? It's a lot. Unfortunately, the demand now, so that's supply. Everything all in, that's how much they think they're going to have. Industrial demand is going to be 524 metric tons. So essentially, really, hey, there's half the supply. Now, that number is up from last year, which makes sense, right? Last year with COVID, down year. But if you go back to 2019, 2018, 2017, that's right where it's been, 518, 515. So 524 seems a little light to me. But okay, let's go with it. They talk about photo stuff, jewelry demand, silverware, all of that stuff. I'm going to tell you where they end up when we return. You're not going to believe it. So they're talking about, hey, net supply versus net demand. And they start listing out what they think demand is going to be. And here's where it gets really shaky. Jewelry demand. It's going to improve, right? Obviously because of COVID. Right now, everything's open. Of course it's going to improve. But yet, they're saying it's going to be about 20 metric tons less than what it was averaging in 19, 18, 17. Kind of weird. Silverware, which I didn't really think a lot about silverware, but believe it or not, it's worth noting. They say 43 tons of silver is going to go to silverware. I was like, wow, that's a lot. But that's 20 tons less. It's more than last year, but 20 tons less than 2019, 2018, 2017. So there's 40 tons less. You'll see where I'm going here in a minute. Net physical investment. Now they're saying that's going to go to 250 metric tons. Got a little problem with that number. Now that's 50 tons more than last year, which, okay. Nowhere close to where the all-time highs were. Matter of fact, I mean, almost about 100 metric tons short of that. But their numbers, supply 1,056, demand 1,033. That only leaves 23 metric tons. So when you really think about where we're at, that is the lowest level going back to 2015. In the lowest outside of 2015, it's the lowest level on their chart. And I think they're light at least 100 metric tons on the demand side. Because I'm going to tell you right now, net physical investment demand for silver, I think it's going to be 70 to 100 metric tons more than they anticipate. Same thing with jewelry, silverware. I think they're going to go back to much more than that. So here's the problem. And go back to Lombardi. The miners aren't set up to ramp up production. Because silver prices were so low, they couldn't make any money. And now with inflation, they were just starting to recover, and now everything costs so much more. And then last but not least, remember in March when silver was hit that 30 and everybody, Wall Street bets and all that stuff? And then the London Bullion Market Association announced the amount of physical silver in their vaults. And they came out and said that somehow physical silver in their vaults had risen a whopping 11% in the month of March. I mean, it was ridiculous. I didn't even know how it wasn't possible. At least I didn't think. Well, guess what? They announced yesterday it really wasn't possible. But they said that, oh, we're sorry. We just made a math error. And that the available stocks actually really didn't increase at all. And I just thought that was just kind of very interesting because that really is what stopped the silver rally at that point when that report came out. And then, of course, we lied, but that's how they do it. Did they make a math error? Sure they did. Do I believe that they actually didn't catch the math error? No. Come on. I mean, these guys do these numbers every month. They see the demand, and then the guy comes out and says, what, 11% increase? Show me the math. My point being is we don't have a big supply, a big silver surplus here. Matter of fact, they're anticipating one of the smallest surplus years in the last couple of decades for silver. I've got a funny feeling that surplus is really going to be a deficit, and I think we're going to see it. You know, when you look at the physical price, look at what the physical price is right now. The physical price of silver is somewhere in the mid-30s. Somewhere in the mid-30s. And on certain, Silver Eagles, the physical price of silver is about $40. I mean, it's crazy. So I just wanted to spend time. I know a lot of people, a lot of you guys follow the silver market. This is what it looks like. It's going to be very, very tight. Any little hiccup here, and we're going to have there will be a silver shortage. Whether that's a surge in demand, an issue with supply, or any of the other things. And remember, to get this small surplus, boy, they really undershot on all these other categories. Patriot Radio News Hour. We got a special coming up when we get back. And then, how do you order from us? We'll explain that as well. 800-951-0592. Quick look here at the markets. The Dow's down 450. The Nasdaq's down 300. Gold's down 14. Silver's down 40 cents, 27.25. We've been talking about silver today. Here's what we're going to do. On utility silver, the pre-1965 dimes, quarters, and halves. Some of you may call it junk silver. We're taking $5 off every one of them. So the dimes, now listen, here's the thing. And this is how hard silver is to get. We've been working on this all week. I've got one bag of dimes, one bag of quarters, one bag of half dollars. That means 100 half dollar rolls, 100 quarter rolls, 200 dime rolls. The dimes will be at $120 a roll for the 200, and then that's it. By the way, they'll also see the biggest increase. That is the best price per ounce anywhere in the country. The quarters will be at $260 a roll. So remember, dimes, you need 2 rolls of dimes to equal the same amount of silver in a roll of quarters or a roll of halves. The half dollars, man, are they expensive. We're taking $5 off, $275 a roll, but that's still a whole lot cheaper than U.S. Silver Eagles. If you want U.S. Silver Eagles, they are not on sale. They're $830 a roll. So those your silver options. And again, if it's me, what I'm seeing here, I don't know how we don't have a doubling of the silver price. I just don't. I actually think we're going to be in a shortage. I look at palladium's a great example. Because of what's been going on with all the green energy and all that stuff, palladium, I mean, it's approaching $3,000. And the reason is there's a big palladium deficit, and the only way it's $2,768 today. But right now, there's not enough palladium mines. Most of the palladium is coming out of the platinum mines. So they're deliberately overmining the platinum just to get to the palladium, but even platinum's $1,200, but palladium's a $200 metal. Now it's almost $3,000. And I think about all the green energy and all this stuff. You don't get green energy without silver. And I'm just looking at regular supply and demand. I could easily see a couple hundred metric ton shortfall in silver. Very possible. I mean, if few things go right, look at this pipeline thing. One of these major mines in Mexico or whatever has to shut down for whatever reason. I mean, there's going to be a problem. So just from that side alone, put a little bit into silver. Absolutely. On the gold side, yesterday we ran $20 gold pieces at $2,100 and $10 gold pieces at $1,050. I was able to buy a handful more of both today, so I'm going to honor that price as well. So that way you got it all covered. We got your gold covered, got your silver covered. Just call our 800 number. Listen, no bait and switch, no games. Just tell us you want the silver sale or you want the gold sale. It's so easy. I apologize. I'll get to that, how to order tomorrow. I talk too much. God bless everybody, and have a wonderful rest of your day.